now.
Alexa, turn on office.
Yeah, so there we go. So welcome everybody. We got the recording going. We've been going for a little bit. I forgot to start it, but we haven't asked any questions yet. We got Walter
Do
Deemer
you want me
here.
to? Do you want me to repeat that link? So
No, it's all right. If people want to know more about you, we'll send
Not
some
me.
links.
Not me. It's JJ.
Well, we got so for you guys who are interested, we got a video up here on JJ if you want to see JJ in 68, I believe it was. But no, I was just reading the chat. But Walter, you know, I guess too, before I start taking some questions, do you want to tell people about the books that you got out there? I really enjoyed how when it's time to buy. Oh, what's the title again?
When the time comes to buy, you won't want to.
You won't want to. And it is a book of quotes that Walter has he said himself from either like legendary traders, analysts throughout his career. And for just being a book of quotes, I found it very impactful because there's so much truth to these quotes. And the one that always stuck out to me, Walter, and I believe I told you this when we were at breakfast, is that, you know, moves can happen like, you know, further than we expect, right? Like just when everyone thinks, you know, the upside moves over, there's still more to go, and vice versa. So, you know, that one always stuck out to me because even though it's like I'm looking at something, it's like, it's already made a 10% move. Well, there could still be more into the move, and I've just found that that's something that's helped myself amongst, you know, other things. So you know, do you want to tell people maybe a little bit about the books and some other stuff that you got out there?
Well, I can. I thought what I'd like to do. First thing is one of my tweets today. I maintain, as I said in the book, I maintain in my retirement an impish presence on Twitter. So I put out a quote. Remember the guy from Acropolis Now that stood in front of a big flaming field, and he said, "I love the smell of napalm in the morning." Yeah. Well, I sent out a tweet that said I credited him with saying, "I love the smell of hedge funds blowing up in the morning." And I think you're starting to see some of that. There's some stresses going on here. I mean, some of the moves here seem to be. So beware of that. The one thing I thought I would mention is what I call the concept of the underlying trend. And I'm going to make a long story short. A cycles guy came in to the Manhattan Fund in the late 1960s, and he had a short-term cycle and a longer-term cycle. And he was giving us signals as they happened, and he got a short-term buy signal, and it was supposed to last for 2 to 10 days. And a day and a half later, he calls back and says, "We now got a short-term sell signal." And Jerry Tsai was not happy with that, but he explained, "No, you don't understand. When something like that happens, it means the underlying trend is unusually powerful." So I think whatever chart you're looking at, whether it be a daily chart or a 1-minute chart, that when you see something happening that's not really supposed to happen, either positively or negatively, it may not be telling you that your analysis is wrong. It may be telling you that the underlying trend is unusually powerful. So, for example, in the stock market right now, you've got an unusually powerful downward trend in most of the market. You've had until today an unusually powerful upward trend in consumer staples and the energy stocks. So when you're looking at some of these things, I think it pays to just keep in mind what the underlying trend is, because if you're short and the underlying trend is down, the odds are better that you're going to make money on the short side than if you're short and the underlying trend is up. And so you want to, if you can, have the underlying trend with you, or at least know whether it's going with you or against you. And that's the only thing that I have to say.
Yeah.
I think
Yeah.
be aware of the underlying trend. It doesn't matter. I'm not a trader. I don't have the temperament to trade. I mean, when I look at something, if I trade something, I got to look at every single tick, and I go, I'm not psychologically suited for it. And I learned that long ago. But I think this is something that applies to everybody from long-term investment managers to very short-term traders.
Right. Right. Well, I mean, and that's why, but you made for an excellent analyst, and like that's why they have these positions, right? It's people playing to their strong suits, work well together. I found a lot of the stuff you speak to, and even just what you said right there, to be extremely helpful. Because in trading, right, why make it harder on ourselves? It's already hard enough. Try and have the wind at your back.
Yeah.
I just think it makes all the sense in the world.
Well, the last time we had breakfast, you mentioned that you were sort of tended to play on the short side, and
Yep.
at that point, the market was going up pretty much. And I said, I admire you for doing that. And now, if you have a bias to the short side, you can sit back and relax.
Yeah, yeah, and it's not, what's funny, and I've talked to people about this too. But when the market is like this, it can be sometimes tougher to the short side, as well. Some of these moves happen overnight. Borrow fees could be through the roof. I might not be able to borrow shares. And I remember you said this to me, and this made me laugh. You said, well, when it's time to short, there'll be no shares available.
Yeah, when the time comes to buy, you won't want to. When the time comes to short, you won't be able to borrow it.
You won't be able to borrow shares, but there's so much truth in that though too. I know it was like a little tongue-in-cheek joke, but it's true. And I know people in here who trade with me, they know that as well.
Yeah, well, as I say, the comments I make, they're sort of tongue in cheek, and then you sit back and you think about it, and there's a lot of message in there.
Yeah, no, absolutely, and I think that's what's great about it. Tongue in cheek, a little humor, but it's telling. There's some truth in there that we could all take away. So good stuff. So guys, I definitely recommend his book. It's such a quick read too, such good concepts in there. And then you also have a technical analysis book too as well, Walter.
Yeah, Deemer on technical analysis. It's about 10 years ago. It was published by McGraw-Hill, and that's also available. And then I have another one called The Essential Basics of Technical Analysis, which is a ebook only.
Yeah. All right. Cool.
All available on Amazon.
All available on Amazon, and I think that's going to cue Steve to link it in the chat. That's what he's doing. Awesome. All right, so I'll start.
Hi, Steve.
Well, Walter says hi. I'm sure he can hear you. Yep, he's typing. He said hi back. All right, so I'll jump into some of the questions that I got here for Walter, guys. Questions that you guys have right now as well that you haven't sent to me. You guys feel free to put in the chat, and we'll get to it. We won't hold you up for too long.
No, just remember, if you haven't explained to these ladies and gentlemen that I am not a short-term trader. I don't know what the market's going to do. I retired 5 years ago because I didn't know what the market was going to do anymore. So I kind of watch and observe interesting things. But if you want to know whether today was the bottom, I have the slightest freaking idea.
I think we're all there too as well. And guys, make sure you go follow him on Twitter. Has a real good Twitter account. And even though you're not like quote unquote active and you retired, I know you're watching every day. And so I think there's still definitely value in following Walter there.
I have the bad news for everybody. Once it gets in your blood, it never gets out. You're all going to be doing this until you die, like me.
Yeah. Well, it's fascinating, to say the least. And so let's jump into some of these questions. Okay, I guess this is a good one to start. So you've seen all sorts of markets, good, bad, ugly. Is the current market conditions like anything you've seen before?
Yes and no. It rhymes with a lot of things. Like, for example, back in the 1970s, there was this thing called the Nifty 50 growth stocks. and they got bid up to unsustainable heights, and then they underperformed for 7 or 8 years. And I think the same unwind thing is going here with the FANGs, which obviously are a major part of the indexes. So, yeah, the unwinding of the FANGs, the gradual backing away from the fact that they couldn't do anything wrong no matter what, is having an impact on the averages. And also the fact that the Kathy Wood stocks peaked over a year ago. You saw that in the .com book. It boomed that the lowest quality goes down first, and then you get gradually move up to the higher quality. But you're getting a complete washout in the ARC type stocks, Kathy Wood stocks, and it's a process that's it takes a while to play out. I mean, the stock went down, or fund went down 50%, and it's still going down. So it's basically the market is washing out the excesses, the enthusiastic excesses that built up,
right?
And it's done that. It did it well. I'm not going to go back and tell you all the times it did it, but it's done all this before. The volatility, I think, is something new. We never in the old days had things move this fast, this suddenly. And it used to be if something did badly, there was bad news, it would take weeks or months for it to play out. Now it takes hours or days. So it's all happening very, very quickly. And that volatility, I think, is something we're just going to be living with forever. It's just the way it is. I don't particularly think it's healthy, but that's the new normal. Meanwhile, people like you have a ball.
Yeah, it's the volatility aspect is interesting, because I think talking to other people, they said the same type of things, right? Like this is obviously this is a new environment, but we've seen like you were speaking to, like the excess and like cleaning some of that stuff out. It might be in a different fashion, but it's happened before. But now we're dealing with larger volatility. Do you have any like speculation of like why this environment is so volatile? And like you said, it's probably here to stay.
Probably just computers.
Just computers. Did you see this? Did you see this like once computers started to become like more involved in trading? Was there an uptick in volatility?
Yeah, I think so.
Yeah. Okay.
Everybody reacts so much faster. In the old days, you had to get on the phone and call somebody to tell them something. Now you get on the computer and everybody in the world knows about it in seconds.
Right. And then, I'm sure having, all the funds having algos executing things, et cetera, et cetera.
I mean, I'm always amazed. I do not understand. Maybe somebody can explain it to it. A stock, after the close, a stock comes out with lousy earnings and the stock instantly goes to its new price. It doesn't go tick by tick down like it did in the old days. It goes from 200 to 172 in seconds. I don't know how they come up with 172, but it seems to usually it seems to hold that first price. So it's just instant reaction, instant.
Interesting. All right. Let's see what else we got here. Okay, we got a question. What career path should any of our members take if they want to become an analyst?
I mean, a professional analyst working the thing is
Wall Street. Yeah, the person phrased it as Wall Street analyst.
Well, the problem is that Wall Street doesn't have many technical analysts anymore. The ideal thing would be to sign up as an assistant to an existing technical person or technical shop. I was lucky enough at Merrill Lynch. I got into the technical department in less than a year, and so that's where I learned. I learned things, but I don't know whether there are very many technical shops. And the other thing to do is you just have to teach yourself, and experience is the best teacher. That, as I said, nobody knows how agonizing a decline like this is until you've lived through it. You can't read about this stuff in books.
Right. Yeah. Theory and practice are different, or not even theory, but like reading or learning about something and then experiencing it can be very two different things.
Now, what was it? There's a famous quote somewhere, and I'm not going to get this right, but you can learn more by trading one soybean contract than you can in a year in the Harvard Business School.
Yep. All right, let's see. All right, so a question we got here. So I guess this is a Twitter follower of yours. Say that they see you often talk about market breadth. What other macro indicators do you look at?
Sentiment. Sentiment's always been a big thing with me, but the problem with sentiment is, it helps you it tells you about the environment, but it doesn't tell you, it doesn't help you pinpoint timing. For example, everybody's going to be bearish at the bottom, but they might be bearish before the bottom too. And so it's like, when the time comes to buy, you won't want to, which is a sentiment thing.
Yeah.
But there's a corollary, which is, just because you don't want to buy doesn't mean it's time to buy. So sentiment gives you, and everybody's hollering about sentiment at the moment. That that you'll know when sentiment is really one-sided. And at the moment, I get the idea, too many people are trying to pick a bottom for it to be a decent bottom. I mean, you're going to get rip your face rallies like you did last Wednesday afternoon. They're also, if the underlying trend is weak, they're also going to fail very quickly, as it did Thursday morning. So, sentiment is, I think, gives you a background, but it doesn't help you that much with timing.
What let's see. So this question is around people you've came across in your career that either impressed you, you looked up to, both analysts and traders. Anyone that really stands out in your mind?
There's a bunch of them. Most people don't know Bob Farrell anymore because he retired 20 years ago, but he was the dean of technical analysis at Merrill Lynch. I was lucky enough to know Marty Zweig personally, who's probably the greatest technical analyst of all time. And he's got a couple books out that are must reading. My favorite book of all is Reminiscences of a Stock Operator, which was written, I don't know, almost 100 years ago, but it's the best book ever written on the psychology of trading. There are a couple of people that most people don't know. Frank Peluso was a guy who taught me a lot about cycles, and he was the one who taught me about the underlying trend. Stan Burge from Tucker Anthony, who's both of those gentlemen have passed away, but Stan Burge was the first one to link economic and monetary factors to the stock market. So, I'm fond of saying that I'll get interested in gross national product when they start trading GNP futures, but Stan would come in with ways to link. But remember, the stock market is the leading economic indicator. So the stock market is going to tell you what the economy is going to do rather than vice versa. And so trying to figure out what the market's going to do by looking at economic stuff is I'm sorry, I think it's a waste of time.
That was sorry to jump in, but that was one of the other things I really took away from the book too. The book of the quotes when it's time this, sorry, I keep butchering the name. But that really stood out to me because I remember I was reading one of my favorite traders of all time. And wow, why is his name slipping my mind right now? He was he invented card counting, MIT guy. I forget his name. But that was one of his big things as well, is that, the market indicating the economic conditions rather than vice versa. That always stood out to me. Next question we got.
The other thing,
Yeah,
I
go
don't
ahead.
want to get too bogged down in macro, but one of the things is that Paul Samuelson, the economist, once said the stock market has predicted 9 of the last 5 recessions. And yeah, and the thing is that that, and it's, by the way, it's now predicted 13 of the last 7 recessions. The thing is, what that tells you is half the bear markets aren't related to economic recessions.
Yeah, it's interesting. It's a fascinating concept to me. Ed Thorpe, thanks Omar. Yeah, Ed Thorpe. He had a great book, Man for All Markets. Really enjoyed that book. All right, let's see here. All right, Ray, ask Walter, with the current sell-off the current sell-off is somewhat methodical rather than violent. Do you think the big firms are selling slowly versus forcing the sell down? Also seems like a liquidity problem similar to the COVID crash. Is that concerning?
I think the liquidity issue is very concerning. That I don't know whether I should admit it this publicly, but Zero Hedge has a lot of neat stuff along with their more wacko, shall I say, more controversial things, and that they have been pointing out the liquidity problem quite nicely. And the other thing is that my crack about hedge funds, that I love this. I love the smell of hedge funds blowing up in the morning. If somebody is forced to sell, what they sell what they can, not what they want to. What they might want to sell might even not have a market anymore. So they very often end up selling the more liquid things. So if there's a liquidity problem and it forces somebody who's over leveraged to have to raise some money, it can spread beyond just the things that they're focused on.
All right. Okay, now I'm going to try and ask this question as concisely as I can. And this question is coming from one of the Market Wizard books, and it's the recent Market Wizard book. We had this guy on the podcast as well, Jason Shapiro. He mentioned in the book, Walter, that he thinks one of the biggest concepts for him as a trader is that the market being a discounting mechanism, but a discounting mechanism not on price but for participation. And the person was asking if you have any thoughts around this concept, or if this is something that you've ever heard of.
I really haven't, although I will agree it is a discounting mechanism.
Okay. And,
I'm not sure what it tries to discount everything, but I'm not sure it's successful.
I think the point he was making, I mean, this is something we've talked a lot amongst ourselves in the room, is I think the point that he's making is that it's not necessarily price that he's focusing on. It's more of like the participation. Like, so, how, what's who's long, who's short, who's in this stock, who's not, like things of that nature. So yeah, we just wanted to get your thoughts on that. But if
I'm gonna be undiplomatic. I think you got to focus on price, because that's what you're buying and selling. What
Sure.
makes the price, you can argue all day. I can tell you the market went down today because there's a lunar eclipse coming up or something like that, and you don't know. But what you do know by looking at the price is the price is going down. That thing you got on the screen sort of seems to be in a downtrend to me. I'm not sure why it's going down. I can give you an idea. It's one of the secondary speculative stocks that peaked over a year ago, but you don't necessarily know why it's happening. What you want to do is look at the price, because that's what you're buying and what you're selling.
Yeah, incredible. Jeff, just
So
so many charts like this.
What it does, I mean, if you think something's going down, and all of a sudden that they announce that their CEO went out and shot somebody in the middle of Fifth Avenue, and the stock goes down, well, you were lucky, but you thought the stock was going down, it went down. The way to make money on the short side is sell it at a higher price than you buy it back at. Why the price goes down is really immaterial. I mean, the old classic rejoinder, why did the market go down today? More sellers than buyers. Why were there more sellers than buyers? I have no idea. More sellers than buyers, or the sellers wanted out more than the buyers wanted in. I don't know why. I could guess along with everybody else. I mean, it's a nice game to play during cocktail hour, but the name of the game is price.
Name of the game's price. Yeah, no, I like that too, and I think that kind of goes to simplifying things, right? Like we don't have to overcomplicate this. Try and simplify. Now it is, complex, but try and simplifying things as much as possible. I think it's a good idea.
I think that's important. I mean, somebody posts a chart with 6 or 7 indicators in the bottom, they just lose me instantly. I mean, you don't need 6 indicators to tell you whether something's overbought or oversold.
Yeah.
In my opinion.
Yeah, and I think many would agree. All right, let's see what else we have here.
The other thing I'm going to say on overbought and oversold is everybody knows the market is oversold. You are not learning that from me for the first time. The question is, how oversold is it going to get? It's going to be the most oversold at the bottom. What you don't know is how oversold that is. And, in a normal correction, you get normal oversolds. In a more powerful correction like we're in now, you get more deeper oversolds. If it's really bad, if the thing is really overwhelming, you're going to get what somebody once called a Jesus Christ oversold. But how oversold it gets, I don't know. But and the other thing also that might be worth pointing out is usually when you have a forceful decline like this, the initial low is usually tested at some point. So you get the low, the initial snapback in normal times. The initial test comes 3 or 4 days later, and then you get very often a second test 3 or 4 weeks later. So, and those tests are the really traumatic phases of the market. But it's not. A lot of people on Twitter seem to be looking for one bad down day, and then they could jump in and off. We were off to the races. It's not that easy.
Not at all. Not that easy at all. Walter, so the question here is around Bitcoin and cryptocurrency. I guess is that anything you pay attention to at all?
I'm sorry, I'm old. I don't understand it. I know some people that have made fortunes in Bitcoin by being in very early and tried their best to get us interested in it. I know some other people like me who haven't the slightest idea. I would say that Bitcoin and the cryptos, if the cryptos sell off, it might affect other markets because people who need to meet a margin call in crypto may be selling stocks to meet it. And I will also say that a lot of people I know, a lot of technical analysts I know, love cryptos. They say they're the greatest things to trade because it's all technical. They said, quote, there are no fundamentals to get in the way, unquote. So they love cryptos.
Yeah. Well, they definitely do. Technical analysis for sure works with crypto.
Now, why they have so many cryptos, I don't know. There are what 9,000 cryptos now, or something like that.
Well, this is a conversation beyond the scope of this session.
Yeah.
But yeah.
Maybe next time we get together for breakfast, maybe we ought to launch a crypto.
Yeah, we'll talk about that. We'll talk about that, Walt. I have some ideas. I got some ideas. I think we could do big things. Yeah. All right, next question here. I guess another Twitter follower of yours saying they appreciate your Twitter feed. You're active on Twitter. Is there anyone that you particularly pay attention to, either on Twitter or maybe just in general to, someone you enjoy, you look up to for maybe their market insights?
Well, I think Helene Meisler has a wonderful list of charts that she posts. Let's see. Basically, and thank you for following me on Twitter. It keeps me occupied in my old age, and it also keeps me out of my wife's hair for a good portion of the day, which she appreciates very much. And I have a lot of fun and on Twitter. And as I say that, I like to point out things like hedge funds blowing up in the morning and things like that. But a lot of times it's the things that I retweet that are the most important. I look at a lot of stuff comes across, and most of it, goes right by. But every once in a while, I see something that's really interesting, and I will retweet it. We just retweet it, and so the retweets are the people that I really respect.
All right, so be on the lookout for that, for Walter Deemer retweets. All right.
Yeah, for those who don't know, that it's just Walter Deemer on Twitter. That I am now fortunate enough to have all sorts of imposters stalking me, but I'm Walter Deemer, the real Walter Deemer. Yeah, if I've been on, so if you see Walter Deemer #5 or something like that, don't follow them, because what they're going to do is, if you respond to them, you're going to get a direct mail from them offering you some scam product.
Walter, you're big time, man. When the Russian bots, when you got Russian bot accounts impersonating you, yeah, you're big time, man.
Yeah, I have fun. I got reporting imposters down to a science. I can do it in my sleep. But so if they retweet something I don't know, and the way I find them every once in a while is I get a notice that Walter Deemer has just retweeted 100 of your tweets. And I look, and it turns out to be Walter Deemer 5, and they're hoping that you're going to you're going to respond to one of those 100 retweets, and then they're going to sell you some sort of scam scene.
They want to, yeah. I got a message about a Walter Deemer NFT recently. I had to double check. I thought it might have been a good investment, but we'll talk about that at breakfast. Gave me some different ideas.
Yeah, it wasn't me.
All right. Question here.
To me, and if you get NFT, it's really NFI. No friggin' idea.
No friggin' idea. All right. Emerging markets returns are going to be lower with a strong US dollar. Does that money come back again to US equities?
I don't know where it goes, and I don't know whether it's going to come out of emerging markets. I don't know where it goes and where it goes. I think the price will tell you where it's going more than anything else.
Perfect.
One of the key messages, there are two key messages in the book. One is a stock is not the same as the company, and the other is price is everything. Yeah, you don't buy volume futures, you don't buy economic futures, you don't buy GDP futures, you don't buy CPI futures. Yeah, you buy a stock. It's at a price. Yeah. You may not agree with the price. That thing on your screen right now is $10.99. You may think that's way out of line, but that's the price it is. You want to buy it, that's what it is. You want to sell it, that's what it is, with real American money. And they don't adjust it. They don't see, well, I guess they do sometimes adjust it if you trade nickel on the LME, but that's another story.
Yeah, I mean, it's a hard concept for people to wrap their head around. And I think that's another great quote you touched on in the book and concept, is that the stock is not the same as the company. I think like just understanding that it's like one of those like light bulb type of moments. Because people can get obviously very stubborn with these things.
Yeah, the thing, I mean, you can talk yourself into staying with the losing position by looking at the company rather than the stock. I mean, you're not trading there. See, I never worked for Warren Buffett, so I never analyzed companies. If I worked for Warren Buffett, I would be analyzing companies. Mm-hmm. I work for people who buy and sell stocks, so I analyze stocks. And the stock, if you tell me everything it's going to go on with Tesla for the next 6 years, everything that anybody would want to know, I still couldn't tell you what the stock was going to do. Because, it's like, some of the FANG stocks. FANG stocks will probably have really good earnings over the next 5 years, but the stocks may have discounted it. And you're buying the stocks, not the earnings.
Yeah, absolutely. So we're getting some, you got some fans in the chat here, Walter. People are jealous that I got to have breakfast with you. People are saying this is gold. So you're getting a lot of fanfare in here, Walter. So here's the question.
Well,
What did Walter order? Oh, that's a good question. I'm trying to remember. Walter, do you normally go for the same thing? Are you one of those guys like when you go to a restaurant, are you very consistent or you like to switch it up?
well, what happened was Steve was picking up the check. So he said, you can order anything you want that's under $3.
Anything that was under $3. What a
Yeah,
generous guy, huh?
I got some really good buttered toast for breakfast that day. And it was on Steve.
My 3 pieces of bacon was excellent. Yeah.
The 3 pieces of bacon's gone through the roof. I think probably I only got one now.
We're not, yeah, we can't even get them for $3 no more, huh? Yeah.
Yeah, you can.
Steve saying we got to schedule our next breakfast with you. Yeah, we for sure will do that. I think I got the eggs Benedict. I think that's what I got. I think I did. Yeah, I enjoy eggs Benedict. Let's see. I think I missed a question though through the chat. I don't know if I did. What else we got, guys? I think that's all the questions I got submitted to me. This will be the last chance if you guys got some questions. Put them in the chat. You can message me either way.
I'm sorry, I don't have any great trading ideas or anything. As I say, I'm not a trader, so I just watch with fascination what's going on. But you had 2 vicious down days in the last 3 trading days, and it's going to be interesting to see how it plays out. Because the thing is, Lowry's has been analyzing this stuff since 1931, and so when you get 2 big down days like this, you often get a series of them before you're over. That's the risk, that this wasn't the last big down day, and you're going to get some rip your face rallies along the way for obvious reasons. Somebody had a great chart the other day that the NASDAQ from 2000 2003 went down, I don't know how many percent, something like 80+%, almost 90%. But it had a number of huge rallies along the way. And so just understand that they're counter trend rallies, and counter trend rallies can break a trader's heart.
Absolutely. Okay, so Steven's got I guess, well, maybe not a question, but maybe get you to tell us a story. I found this story funny as well. You told us at breakfast about when you were a gaming analyst and some of the stuff going on in that era with the casino stocks. Obviously there was a heavy mafia presence in Vegas at the time. Do you remember that story you were telling us?
Yeah, well, actually, the story was that shall we refer to them as businessmen of Italian background. And Howard Hughes came into Vegas, and he bought a couple casinos. And Howard Hughes ran clean books, so everybody now knew what casinos were actually earning, because everybody was skimming and stuff.
Mm-hmm.
So casinos were a big deal, and that they were becoming more legitimized. But some of the big casinos, Frank Sinatra would have points in the casino. Whatever the casino had, as net income, the 2 percentage points went to Frank Sinatra or something like that.
Mm-hmm.
And it got to it was such a fad group that Resorts International, the very same Resorts International that we know and love today, in 1968 changed their name to Resorts International from Mary Carter Paint. It used to be Mary Carter Paint, and they found out they had a small interest in a casino in the Bahamas. So they decided that would be a lot more to a price earnings multiple than Paint would. So they decided to become a gaming group. And anyway, there was a little one called Parvin Dorman, which had a very small float. And Parvin Dorman, there were a couple of shenanigans that were going on, and there was essentially a corner in the stock, and a short squeeze, and then somebody in the corner decided to sell ahead of time, and there were a few other shenanigans. But anyway, I was we had a gaming analyst, and I went into his office one day, and he was holding up this big piece of paper, and he said, "Fail not at thy peril." And it turned out it was a subpoena, that they were investigating some of the shenanigans going on in Parvin Dorman. And so that they sent him a subpoena. A couple of weeks later, I'm in his office. He's got another piece of paper, says the same thing: "Fail not at thy peril," which led me to my now famous rule: when they serve the second subpoena, sell.
You guys heard it here. Timeless wisdom is getting bestowed upon us. When the second
I'm
subpoena,
not sure it's wisdom, because I'm not sure how many people get served subpoenas anymore, but no, what the heck?
I know there's still shady stuff of that nature going on.
Oh,
Walter.
really? Oh, really? What? You think so?
Well, no, it's funny. Someone in the chat.
You think so? Yeah, my mother told me it was all cleaned up. Everybody, nobody was. I mean, the old joke, and this was told to me by an accountant. The CEO calls the head of the accounting department into his office at the end of a quarter. Says, "Well, what were our earnings per share for the last quarter?" And the accountant says, "What do you want them to be?"
Yeah, what do you want them to be?
What do you want them to be?
Well, I find it real interesting with the China companies, and I don't know if we talked about this at breakfast, because I find, well, not so much recently, but I found myself over the years shorting a lot of the China companies, because they don't get audited, and so I guess they can essentially make up whatever type of earnings, whatever type of numbers they want, and there's no repercussions.
Yeah,
for this.
you were talking about that, because I was sort of raising my eyebrows that you were trying to, shorten a bull market in the United States, and you said, "Oh, China."
Yeah, I kind of take it upon. This is like my patriotic duty. I look at it in those lenses, like I'm, it's a patriotic thing I'm doing here.
Are you short Russia?
My sure. If I could find, I don't know what. I guess are there some Russian companies? I don't think I've came across many.
I don't think they're trading anymore. Anything
they're not, right?
Yeah. The problem is, I have a friend who thinks the best investment in the world right now is private jets, because he said the upper class ain't going to go through airports anymore, and they got so much money. They got money coming out the wazoo, so they can go buy a private jet. Somebody said, "Well, you must be having fun." He said, "All these Russian private jets, must be on the market." He says, "I'm not going to buy them." He said, for two reasons. Number one, you don't have you can't find out the title to them, and number two is that I'm afraid by the time I take delivery, they'll be shot full of bullet holes.
Yeah. Probably want to. Probably don't want to get involved in anything like that.
Yeah.
Buying of Russian private jets.
Or anything.
Anything going on. Yeah, that's
like, I think somebody had some put options on some Russian thing, and they stopped trading on it. And I don't know whether the guy was absolutely right, but I don't know whether he was able to collect on it or not, because they stopped trading in it.
Yeah, interesting.
That'd be a bitch. You buy a put option on a stock, and the stock ultimately goes bankrupt, and they stop trading, and the SEC stops trading, and your put option expires, and you can't do anything about it. I mean, that's not fair. It's the way it goes.
Yeah, the way it goes. And that's the way I look. I look at it too, and that's why I think like trading is so tough, right? Because like you do have like maybe I know that's kind of like a maybe more of an outlier type of thing to happen, but even going back to what we were saying with like when it's time to short, there's going to be no borrows available. Like there's so many like stipulations or so much odds stacked against you, like you just got to be very diligent. You got to be very disciplined, et cetera. Not to get down on that tangent.
But
But
trading is stuff, and they keep putting up rules, and you find out that you're acting in good faith, and all of a sudden your broker or somebody is saying, "Oh, Ray, you can't do that."
yeah,
Why not? Well, the rule 82B1 says you can't do that today. And
yeah,
he said, I never heard of rule 82B1. And he said, well, that's why you can't do it today.
yep. All right, we got a question here, Walter. When did Walter realize that he wasn't a trader? Did you try trading
Yeah,
prior?
I tried trading. I have tried trading. I have traded. I once traded eggs. I once traded pork bellies. I once traded the other stuff that still exists. And as I say, the psychology, you have to have ice water in your veins. You have to be, I think, to be a successful trader. And as I say, that I got to the point where I looked at it when I had a position. I started looking at it so closely, and every tick that went the wrong way, I got all nervous, and every tick that went the right way, I said, "Oh, well, good, I got this one." And I just didn't have the temperament for it, and I just suddenly realized that this is craziness.
Yeah,
I may make money trading, but I'm going to give it all to my shrink.
you're gonna be. That's for sure. That this game is that's the hardest part, right? Is for sure the mental side. I think at least. Yeah.
Yeah, it
So
is, and you have to, as I say, I think you have to have a real mental approach, and some people just aren't equipped for it. I'm not.
yeah. Yeah. Walter, I don't know if anyone's equipped for, well, natural. Okay. Maybe so. Right. There may be like outliers who are naturally gifted at trading for sure. But I would probably say just like the way the human brain has evolved and just how our brains work, I don't think is necessarily conducive to trading. And I think it's kind of a learned, or you can improve on these things, things of that nature, but it by no means is it easy.
Yeah,
Um,
you have to be cold blooded, and I'm not cold blooded, I guess.
all right, so we have any more questions, guys? Make sure you get them in.
Procol Harum Gala Midem, MIDEM, on YouTube at the 2-minute and 55-second mark. The legendary JJ.
Legendary VWAP Trader One,
Yes.
who I don't think even looks at VWAP. Is he using VWAP now? He might be using VWAP now.
Yeah, every once in a while he posts something on Twitter. I don't understand it, but it looks very intelligent.
Yeah, he likes to come across that way, Walter.
Yeah.
He likes to. He's living in London now, by the way.
Oh, he is?
He's in London. Yep.
I thought he was in Canada.
He was in Saskatchewan.
Yeah.
And, and then I want to say, I don't know, a few months ago, he moved to London, which was probably a good move out of Saskatchewan for him.
Well, anything besides Saskatchewan, but I'm surprised London.
Yeah. Well, I think love brought him there.
Oh, because that's like if you or Steve told me that you moved to London out of Florida, I would say, what's going on?
Yeah, well, I don't think I would do that. I mean, that's just too much rain. I mean, I don't think I could do that. I like the weather, even though we're going to get into the summer months here, going to get pretty brutal.
Yeah, well, Steve doesn't get on Twitter very much, but Steve got on Twitter and he was sitting by his pool or something, and in his flip flops, and he had his computer there, and he said, this is my trading room in Florida, and it was right next to the pool, and so I responded. I said, "That's good, but I hope you don't go underwater on your trades."
Oh man, yeah. So I guess a little cloudy today. But yeah, it's gonna start getting hot here. That's all right. So what else, guys? We got any more questions? Someone thought you were someone was like JJ wasn't even born in 1968.
Look at the video.
Look at the
You tell me it wasn't him. I mean, maybe he was reincarnated, but that was him.
So we you got a question from
Oh, and
Steve?
you know, I just thought of something. Procol Harum is a British group.
Ah,
I thought he was in Saskatchewan, but now that he's gone back to London, he's returning to his roots,
returning back
his
to his roots.
musical roots.
So Steve's asking, how's the food at the new place?
Lovely.
Lovely.
have
Are you in?
Prime rib, shrimp cocktail and prime rib for Mother's Day.
Oh, look at that. Are you in Stewart or Palm City?
Palm City.
Palm City.
We're on the river.
Nice.
So usually at this time I would be down, sitting by the cove, looking across at the Stewart just before the Roosevelt Bridge. The river's a mile wide, watching birds, and with my iPad on Wi-Fi watching the market.
There you go. Sounds like a nice life.
Actually, I was trying to figure out if I could do this from down there, but the Wi-Fi has been cutting in and out, and I didn't want to have a problem with it.
All right, we got what's up, Dennis? He asks, is there any benefit to getting a CMT if you're a day trader?
No.
No, well, there you go, Dennis. Nope.
I am not a CMT. And I was a founding member of the MTA, but I am not a CMT. And the reason is I am not a CMT is they had a bunch of indicators that you needed to learn, which I was not familiar with. And one day I was using Metastock, which is an old charting program, and they had a profitability tester. And so I did the profitability tester on this indicator I didn't know anything about, using the traditional parameters that were set up, and it lost money. Then I said to myself, why should you learn an indicator that doesn't work? So I didn't. Experience is the best teacher. You can learn a lot about books, but it's like markets being overbought and oversold. You learn a lot about oscillators and books, but it takes experience to find out that the market or a stock or whatever is the most oversold at the very beginning of a move, and it's the most oversold at the very end of a move. So if you have little lines on your chart, normal, overbought, and oversold, and you find out that it goes way beyond normal overbought, that's not a sign of a problem. That's a sign of a very powerful move. If you have a thing on a line that's normal oversold in a normal decline, that'll tell you when to get in. But in a bad decline, you've got a lot more oversold, and you never know how oversold it can get. So, so if you learn oscillators, sometimes they don't tell you. You learn that the hard way.
Yep. Experience the best teacher.
Experience is the best teacher. The thing is, I'm old enough. I thought by now I never want to make the same mistake twice. But man, I never knew there were so many mistakes to make once.
Isn't that the truth?
Yeah, I mean, you do something, you say, I'm never going to do that again. And you never do it again. Then you do something else. You say, I'm never going to do that again. And you never do that again. I got 60 years of, I'm never going to do that again. And I keep finding out new things.
Yep. Yeah. The chat's loving that. They're concurring.
Yeah. I'm going to read from my book. This is, I want to get this quote right. This is from Alan Shaw, who was an old timer from Smith Barney. The stock market is the creation of man that has most humbled him. Think about it. That it is. It's most humbled. It's, the other one is, you know, whenever you think you find the key to the stock market, some son of a bitch comes along and changes the lock.
Yep. Yeah, it's you know, in you know, to like the mental stuff we were talking about too. And I think what's tough for people, tough for traders, but tough for people in general is people don't like being wrong.
Yeah.
Right. But we're playing a game where we're going to be wrong quite often.
Yeah. And somebody posted on Twitter the other day, I thought it was very good. He says, I love taking small losses because they prevent me from taking a big loss. So as you say, it's cost of doing business.
Cost of doing business.
Cost of doing business. I mean, I know people who have been bearish on Tesla for 950 or for 900 points.
Mm-hmm.
And they're convinced it's not going to ever, and they may be right, but they've been wrong.
They've been wrong. Yeah.
It's the price.
It's the price, right? Going back to the company and the stock are totally different things. All right, let me scroll back that because I know there's another question. All right, so he asks, can Walter talk about how he did technical analysis on stocks? What information did he use? Yeah, Web Trader, if you want to go back, I think Walter, you touched on some of these things early on, I believe, correct?
Well, in the old days, all we had was price, high, low, close, and volume, and we did relative strength, and that was basically it.
Mm-hmm.
We had trend line was the chart package that we all used, and they had a 200-day average, day moving average, which is actually a 30-week moving average, and that was basically it. We didn't have computers. You couldn't do these exponential moving averages. Were impossible to do. We were doing it all by hand or on a calculator. Or something like that. So it was really very basic.
Walter, so I guess a question from me. I remember us talking a little bit about this at breakfast. Traders. So, you know, you being an analyst, you're there to offer your analysis to help the traders make decisions. How frequently did you guys butt heads, or did the trader, you know, maybe he wanted to put on a trade, but he doesn't like what you're saying? How often did that happen? And is there any like notable ones that like stick out to you?
Well, contrary opinion works with money managers as well. So I quickly found out that if I made a presentation at Putnam and it was a bullish presentation, and at the end of the presentation, the fund managers hoisted me on their shoulders and carried me gleefully to the trading room where they wrote out their buy tickets, I would go back to my office and say, I've done something wrong. If, on the other hand, the fund managers looked at me like I had two heads, one of which was purple, I knew I probably had it right. So the problem is being in contrary, and this is the problem with an analyst. You know, most of the time you're contrary, and it's not a great business plan to tell your clients most of the time that they're wrong.
Right. That's interesting. Even like with money managers, how that would make you second guess. Do you think it's part of like someone's conviction? Like if someone's like maybe like over exuberant about something, like that might be like, wait, hold on, like, because like rarely do we ever come across like sure shots in the market, if ever, right?
Right.
Yeah.
And most of the time when I think I got a sure shot, I get my head handed to me.
Right.
The best ones are when you're sitting at your computer typing in something and you're typing in a buy order, And you're literally trying to keep from throwing up on your keyboard as you type it because it's so crazy. That thing's probably going to work. But when you type in the buy order and I said, finally, I got a sure shot, you're probably going to get stopped out.
Yeah.
It's
Yeah.
it's a tough business.
It's a tough business. So I gotta reconsider when I'm like fist pumping as I'm like executing.
Yeah. Well, another quote from the book. Find it. Go ahead, keep talking. I'm just looking.
Yeah. Yeah, no, because I always I joke around. I'm like, all right, this is a fist pump short. Like, you know, I just joke like I'm shorting, like I'm fist pump. I was like, yeah. No, we deal in probabilities, not certainties.
Yeah. This is from Peter Brandt. When a trader starts to feel really smart, he or she is headed for a huge drawdown. That's Peter Brandt.
Yeah. Shout out to Peter Brandt. Yeah, he was in you read some of the Market Wizards books at all?
Yeah.
Yeah, he was in Peter Brandt was in the latest one, Unknown Market Wizards. He had a really good section in there. I believe he was the first trader profiled.
Yeah. Well, I knew him, so he wasn't unknown.
Oh, Walter knew him. Yes. He had an interesting story. If I remember correctly, like he had some time off from trading and then like he came back, like maybe he was, I don't know if he quit or he took a break and then he came back. Do you know about this, Walt?
No, I don't.
No. Okay. Well, it was something of that nature. But I really enjoyed his section in the book. He takes his like stops he treats it very religiously as as you should, really emphasizing risk. All right, guys, if we don't got any more questions, I think we'll wrap it up. Walter, really appreciate your time, man. It's always a pleasure.
It's fun.
We're going to Steve's been telling.
I admire all you people who are trading. I do. You're better men and women than I am. God bless you.
Well, we really appreciate you sharing your wisdom and your experience. As you were saying, yeah, you can't replace experience. And so we appreciate you've had a lot of it. And so we appreciate you sharing that with us to help us make better trading decisions. So we really appreciate you taking the time. And yes, Steve's been bugging me over here. He's like, schedule with Walter time for breakfast. I'm sure you'll be getting a message from him.
Well, due to inflation, probably the minimum will have to be bumped up to $4.
Well, hopefully he can stretch his wallet a little bit this time for us.
Mm.
Everyone in the chat is thanking you, Walter. So
you. Can't see the chat, so I don't know. I'm not technologically well, but thank you for putting up with me.
Well, we appreciate you, man. We'll be in touch. All right.
Okay. Take care.
All right, everyone. Have a good one.
Okay. Happy trades.
All right. Bye, everyone.